Welcome back to XRP Update. What do you think is the biggest enemy for a crypto investor right now? Is it volatility? Or maybe the SEC? The truth is, the biggest enemy in this market is distraction. While the average retail investor is panicking over daily red and green charts, the big players on Wall Street are sitting in the background, playing a completely different game. Before we dive into today's breakdown, I want to ask you a question that might completely change how you look at your portfolio. Is Ripple truly just a cross-border payment company? Or has Wall Street quietly prepared to turn it into the new operating system for the entire global financial system? And if that is true, what is the ultimate signal from banks that will make XRP completely unstoppable? We are going to break down the answer to that question today using hard data and real facts, because the signs developing around us have become impossible to ignore. By the way, if you appreciate deep dive research that cuts through the daily market noise and helps you spot these institutional moves early, hit that subscribe button right now and turn on notifications. Joining the family here takes just a second, but it ensures you're always ahead of the crowd with the real data that matters. Ripple is expanding at a pace that the average investor can barely comprehend. Global ETFs are growing, institutional inflows are rising, and their stablecoin, RLUSD, is seeing some of the most aggressive minting events in crypto history. Even major financial firms are now openly calling the XRP Ledger critical infrastructure for the future financial system. At the same time, banks are privately admitting they need fintech companies like Ripple because traditional institutions simply do not have the time or technical expertise to build this infrastructure from scratch. It makes you wonder if we are witnessing the early stages of the largest financial transformation in modern history, while everyone else is staring at short-term price charts. When you step back and connect the dots, this no longer looks like a normal crypto cycle. This is exactly why long-term XRP holders refuse to panic and sell during market dips. Think about it for a second. Ripple has spent more than a decade building network rails, securing global partnerships, fighting regulators, and preparing for a world where blockchain technology blends into global banking. While most crypto projects came into the market focused entirely on hype, launching meme coins and chasing retail speculation, Ripple was building enterprise-level systems for banks and governments. Now we are suddenly entering an era where tokenization, stablecoins, and instant settlements are the biggest talking points in global finance. Is that a coincidence? Not at all. Ripple knew exactly where the world was heading. Traditional finance is finally acknowledging that blockchain infrastructure is coming, whether the old guard likes it or not. And the biggest rewards naturally go to the company that spent a decade laying the foundation. To understand the scale of this shift, we have to look at the data. One of the most massive developments hitting the community right now is the growth of real-world asset tokenization directly on the XRP Ledger. Reports show that the value of tokenized assets on the XRPL is rapidly approaching nearly $5 billion. Just pause and think about how wild that actually is. We are talking about real financial products moving onto blockchain rails, treasury bills, bonds, and liquidity networks. This is no longer a pilot project or a theoretical use case. It is the financial system migrating onto digital infrastructure in real time, and Ripple has positioned the XRPL right in the center of it. The crazy part is that the average retail investor still doesn't realize what tokenization means for the native value of this network. When trillions of dollars eventually move through these tokenized systems, which network will institutions trust? A network built yesterday, or the one that spent over 10 years mastering compliance, security, and global payments? This brings us to a major piece of the puzzle, RLUSD. Ripple's new stablecoin has caused a massive stir across the crypto industry. Ripple minted around $200 million worth of RLUSD almost overnight, instantly sparking speculation about why they are building such a massive liquidity pool so quickly. Top analysts believe Ripple is preparing for a massive wave of incoming institutional demand. It makes perfect sense when you look at it from a corporate perspective. Institutions want the speed and efficiency of the blockchain, but they are terrified of crypto volatility. They need a stable bridge, and RLUSD provides exactly that. However, this move has caused some unnecessary fear among XRP holders. People frequently ask if a stablecoin will eventually replace XRP and make it useless. The answer to that question was actually cleared up perfectly by Ripple's own executives. and it answers our first big question of the day. They explain that when RLUSD is utilized, XRP utility does not decrease, it actually goes up. Why? Because XRP is the native asset powering the ledger. No matter what asset is being moved or what transaction is happening, every single operation on the network still has to interact with the core XRP Ledger infrastructure for gas fees and security rails. RLUSD and XRP are not competitors. They are designed to work together as two parts of the exact same engine. If you look at the bigger picture, Ripple is moving far beyond the title of a simple crypto company. They are positioning themselves as the financial infrastructure for the digital economy, and there is a massive difference between those two things. Crypto projects come and go with every market cycle, but infrastructure companies embed themselves so deeply into banking networks that it becomes nearly impossible to remove them for decades. This is why it is such a massive deal when major asset managers like Van Eck openly discuss Ripple and the XRPL leading a new corporate chain era. Think about how much things have changed. A few years ago, the media constantly attacked XRP and called it irrelevant. Today, the world's largest financial institutions are actively debating how to integrate it into future banking systems. That kind of narrative shift does not happen by accident. At the same time, Ripple's reputation in the traditional business world is growing stronger by the day. CNBC recently ranked Ripple among the world's top disruptor companies, placing them ahead of several legacy technology giants. Furthermore, they appeared near the top of the Prime Unicorn Index, with a valuation crossing $26 billion. These are not random crypto rankings. This is the traditional financial sector recognizing Ripple as one of the most influential private technology companies on Earth. This recognition matters immensely because institutional confidence is driven by perception. The more legitimate Ripple looks to Wall Street and global regulators, the easier it becomes for conservative banks to justify adopting their technology. The global ETF landscape is also becoming impossible to ignore. XRP investment products worldwide are approaching nearly $1.4 billion in inflows. Think about the reality of that number. Billion-dollar institutional money is flowing into XRP investment vehicles, even while the asset itself sits far below what analysts expect during full adoption. Imagine what happens when spot XRP ETFs gain widespread traction across major markets, while tokenization accelerates simultaneously. We are already seeing heavyweights like Bitwise, Franklin Templeton, and Grayscale push deeper into XRP products. Meanwhile, on-chain data shows that whales are aggressively buying up XRP during every single market dip. There is an old rule in finance: smart money buys heavily during fear and sells during euphoria. While retail investors panic over short-term charts, smart money is quietly filling its pockets. Another massive story developing behind closed doors is that banks are finally admitting they need help. During recent financial hearings, banking representatives openly acknowledged that traditional institutions are looking toward third-party fintech providers for digital asset custody and tokenization infrastructure. This might actually be the most bullish long-term indicator for Ripple. Banks do not have the luxury of spending 5 years figuring this technology out on their own anymore. Blockchain adoption is moving too fast globally, and institutions know they will be left behind if they lag. The fastest solution is to partner with the companies that already built the rails. That is the exact enterprise niche Ripple spent years preparing for, while the rest of the market ignored them. Think about how massive this opportunity really is. There are thousands of banks and credit unions in the United States alone that will eventually need blockchain integration. Building that tech internally requires massive budgets, years of testing, and specialized engineering talent that most regional banks simply do not possess. Ripple already has the partnerships, the technology, and the regulatory experience ready to deploy. What happens when thousands of financial institutions all race toward blockchain adoption at the exact same time? The companies already positioned as infrastructure providers win the entire market. Meanwhile, Ripple Prime is expanding rapidly through new institutional services. Their recent partnership with EDX Markets and EDX International gives institutional clients highly efficient access to crypto liquidity while laying the groundwork for future RLUSD integration. To top it off, Ripple Prime secured a $200 million debt facility specifically to scale up operations. These are not the actions of a company that is struggling. These are the strategic moves of a business scaling up for massive incoming institutional demand, and the broader market is finally starting to notice. Of course, the journey is not without friction. Ripple and the wider crypto industry still face political resistance from certain lawmakers and regulators trying to slow down adoption. There are ongoing debates over master account approvals, banking access, and stablecoin legislation. But the most interesting part of this story is that despite the friction, institutional adoption keeps growing anyway. Banks still want the technology, asset managers still launch XRP products, and stablecoin growth continues to accelerate. The momentum is moving forward while regulators argue in circles. History shows that technological revolutions rarely stop just because old legacy systems resist change. This is exactly why so many long-term holders believe the market is still massively undervaluing what Ripple is building. Most retail traders only look at daily candles and immediate price action, whereas institutions focus on infrastructure ownership, liquidity rails, and future transaction volume. Retail chases hype, institutions chase infrastructure. Right now, Ripple is quietly becoming one of the most connected infrastructure companies in the digital asset space. The partnerships, the ETFs, the stablecoins, the tokenization, it is all starting to connect into one massive picture. Even Ripple's executive team recently shared that the tone from legacy banks changed almost overnight following recent shifts in the political and regulatory environment. Institutions that used to hesitate are suddenly very open to partnerships. They are no longer asking if blockchain will integrate into finance. They are asking how fast they can get in before their competitors beat them to it. That is a massive psychological shift happening behind closed doors. So while retail investors panic over short-term volatility, Wall Street appears to be quietly preparing for a completely different future. It is a future where tokenized assets move globally in seconds, banks use blockchain for instant settlements, and digital asset infrastructure is built directly into traditional financial networks. If that future arrives the way top analysts expect, Ripple and the XRP Ledger are going to play a much bigger role than most people currently realize. But I want to hear from you guys. If banks fully embrace this infrastructure over the next 2 to 3 years, and trillions of dollars start moving through this network, what price do you honestly believe XRP could reach? Will it hit $5, $10, or a number completely beyond retail expectations? Drop your thoughts and your price targets down in the comments below, because I really want to see where the community stands on this. If you found this breakdown helpful, make sure to like the video and subscribe to the channel so you never miss another research-backed update. Thank you for watching, and I will see you in the next one.